Back, inflation data has started trickling in. Let's have a look at what inflation data looks like for the month of September. October CPI headline inflation has come in at 6.2% versus 5.49% in the month of September. That's a big increase on a month-on-month basis, and even as compared to estimate, we were working with a figure of 5.8% and it has come in at 6.21%. Inflation has clearly risen much more than what we were working with. Food inflation, meanwhile, has come in at 10.87% versus expectations of 9.6%. Rural inflation, CPI rural inflation at 6.68%, urban inflation at 5.62%, and industrial production data has also started coming in, 3.1% increase on a year-on-year basis versus estimate of 2.5%. So industrial production data has been much better than what the street was working with, but inflation clearly continues to remain a concern, both on a month-on-month basis as well as compared to what ET Now poll was suggesting. It's a big miss and it has come in much ahead of what the poll was suggesting. We also have to decode this and more. We have two experts joining us on the show. Suvodeep Rakshit, Chief Economist at Kotak Institutional Equities, and we have Indraneel Pant, Chief Economist at Yes Bank, now joining us. Gentlemen, thank you so much for taking your time out and speaking with us. Mr. Rakshit, coming to you first then, how do you read these numbers? Clearly much ahead on a year-on-year basis, and as compared to estimates, numbers look weak, but what is your reading?
Clearly, this is way above anybody's expectations, market expectations, our expectations, and I think even definitely the RBI's expectations also. What this kind of reflects is vegetable prices and food prices in general have seen a significant rise. So most of the increase is being driven by the food inflation part. But having said that, we should also remember that if you look at the breakup, the core inflation has also started to move up. The trough was at around 3% 2-3 months back, but now it is somewhere around 3.6 to 3.8% for the current month. Now, slowly, this core inflation will continue to increase, partly because of the favorable base effects moving away. And as well as if you see at the headline inflation part, which again is being driven by the food inflation, that will kind of indicate that the RBI has to be, will remain cautious on the inflation part of things for a much longer time. December rate cut is definitely out of the window, but strictly looking at the inflation numbers, and to that extent, it's important to kind of recognize that it's a food inflation part. Once the food inflation goes away, will the dynamics change? I think that's important to decode from here on. If you look at the November numbers, I think the print on the headline inflation will be on the higher side, primarily because the food inflation component is still not coming down. November early indications show that food prices have remained on the higher side.
Food prices have remained on the higher side, and you expect the trend to continue going forward in the month of November as well. But Indraneel, your thoughts? Do you expect the trend to continue going forward? Your assessment of where inflation could stand for the month of November?
Well, I think Shubhadeep has summed it up quite well. And just to sort of continue from where Shubhadeep left off in terms of the November, early indications, he did point out the early indications, obviously, the fruit prices have once again shot up. The last data that I saw on a month-on-month basis till date in this current month is about 5.5%. The vegetables has softened, which is led by a softening in the tomato prices because it's the cultivation season. Surprisingly, the onions and the potatoes are holding strong, and the month-on-month momentum is as strong as in the previous month. And cereals have been on a higher side compared to the previous month. So I think he's right in assessing that the inflation is on the higher side. But in my own opinion, I think the focus, and even from an RBI's perspective, needs to also, to a certain extent, shift onto the core perspectives. And the point that I'm trying to make here is that we have a Trump presidency once again. We are talking about tariffs being raised not only on China, but on the rest of the world. That will definitely have an inflationary impact. The domestic currency has also moved quite significantly compared to the very comfortable zones of 83.50 odd levels to an 84.50 today, and I don't think this is all that is there to the depreciation pressure for the currency. So all these factors will need to be assessed by the Reserve Bank of India, factored in, and the focus therefore has to also be on the core WPI and what is the implication of both higher inflation on the CPI side from a food perspective, and the likely pass through that might or might not happen from the input prices, because most of the companies are strained in terms of profitability. So there can be a relatively larger pass through if input costs start hitting them. So core also, in my opinion, becomes important. Yes, Shubhadeep did point out that core floor has already been passed. We are looking at core settling at around 4.4 to 4.6% by the end of March this year. And as I said, that should also be a focal point in terms of the RBI's assessment of inflation going forward.
Correct. So CPI inflation has come in at highest in the last 14 months and core inflation at 3.7%, highest in the last 10 months. But Suvodeep also wanted your thoughts on RBI's inflation target for FY25, which stands at 4.5% and 4.8% target for the third quarter. Do you see risks to this target?
Definitely. The third quarter will definitely be on the higher side, which will kind of push the full year numbers also on the higher side. The 4.5% that they have in terms of the full year will have to be revised higher. I think one of the more important parts in this whole inflation rates and growth side of story is more on the growth side also. I mean, inflation third quarter will be on the higher side. At the same time, if you look at the second quarter growth prints, that will be much lower than what is being expected as of now. So to that extent, the job of the RBI becomes that much more complicated when there are downsides to growth and upside to inflation. And along with that, I think from a policy perspective, not just the revision of this year, which obviously should be closer to, I think, full year CPI inflation, our estimate would be closer to around 4.7% for the full year. It also kind of sets the tone in terms of where we see or where inflation goes in FY26, and hence how the RBI reacts. So inflation clearly will be has to be probably, and I think if the third quarter is revised higher, the full year number for the RBI also has to be revised higher.
There are risks to third quarter numbers and the estimates that Reserve Bank of India has given, and also for the full year FY25. But also wanted your thoughts on the impact we could see on the interest rate environment going forward. There's this Monetary Policy Committee meeting in the first week of December. Indranil, do you believe rate cut possibility is completely off the table as of now?
So again, contextually, I think the change of stance clearly implies that nothing is off the table. And they have been quite clear about the fact that they want to be data-driven, nimble. And from that perspective, I think definitely these prints is something which is on the higher side, even higher than 6%, which they would want to sort of see through. So this does not necessarily sort of imply, in my mind, a rate hike from the Reserve Bank of India. Talking about the rate cut story, I think we will need to wait beyond December. We were looking at, or very tentatively sort of opening up ourselves to a February cut. But if we have got a 6.2, and if inflation is also likely to be felt from the core side because of Trump policies, etc., which will gradually get factored into the data, I think on a more sort of cautious side, the RBI might even want to skip February. But I think from the current perspective, because we are at the inflection point so far as rates are concerned, it will be very difficult for anybody of the analysts to actually confidently call for a February. And December, however, December is almost a zero probability game at this point.
Cut in December is almost a zero probability and difficult to determine whether a rate cut could be seen in the month of February as well. Indranil and Suvodeep, thank you so much for taking your time out and speaking with us here on ET Now. With that, it's a wrap, but you don't go anywhere. Stay tuned to the channel.
If you like this video, then like, share and subscribe to ET Now.